David, first of all, I thought it was incredible when you looked at that Treasury auction, and that, again, is linked to what China was doing with Treasury buying or not, that it was the worst one in 10 years. Does that give us anything, or is that actually about what the Fed does next?
I think there is something to that. I think there's no doubt. But we also have to remember, the pace of accumulation of reserves by China has slowed dramatically. Number two, I can tell you that given how strong the dollar's been, we have been seeing persistent dollar selling from reserve managers. And I'm not pointing at China in particular, but our own proprietary flows will suggest that this is the reason why the euro sell-off against the dollar hasn't been sustained, because we've seen central banks basically leaning into the dollar rally. But I think, but I don't know to what extent this has been a big story. I think the bigger story is that, unfortunately, I think the investor community, especially the fixed income market, continue to be gripped by the sense that a recession is around the corner. This is the reason why, I don't have to tell you, the market is still pricing in 2 cuts for the Fed over the next 2 years. And I think, the market, has been, in some sense, comatose by a flip-flopping Fed, if you like. But I think, personally, I think the market's lost the plot a little bit here. The market is now in the super dependency mode. This is also the reason why I think the market hasn't really pricing in much of a probability for a U.S. China deal, even before last week. So I think from that point, if we get a deal, I think for me, the most straightforward trade in the whole world is higher U.S. rates.
Okay, David, I have a chart. It's a great chart because it's just simply looking at U.S. core CPI, the fact that it cooled down quite significantly. But look, forget that. Is the Fed going to cut or not?
Personally, I think not. I mean, Richard Clarida, who is the vice chair of the Fed, who was my former PhD dissertation advisor. We have to remember, he was the first ever, international economist to be appointed in such a senior position at the Fed. And I think that's great. Richard knows that there is actually a world economy outside the U.S. and how that rest of the world can affect the U.S. And I think the U.S. China have to believe that the uncertainty has been weighing on him. I think the fact that he late last year was more dovish than Powell, I think that must have loomed very large. I think this is going to be a very important thing. If we get a deal, I think there's no reason for the Fed to actually continue to sound dovish.